Let's get ready to mortgage. He is the prince of programs, guru of guidelines, master of matrices. He puts the fun in funding. Please welcome Mark, Mr. Mortgage Eitel.
All right, you heard him. My name is Mark Eitel, host of the Mr. Mortgage Show. And first, let me thank you for spending a little bit of your weekend with us. Dom and I are in the studio and looking forward to another show. So hopefully you are settled in with a cup of coffee or a cold beer or a shot of tequila, whatever gets your weekend started. So super excited that you're with us. So just throwing this out there, the Anytime Hotline. If you have questions, you can call or text us at 561-291-8569. That's 561-291-8569. Get your questions over to us, and we'll be happy to answer them during the show. Or you can visit the website, www.mr.mortgage. That's mr.mortgage, and you can submit your questions there. So as always, we kind of kick the show off, going over the news of the week, most specifically the financial and interest rate and real estate news. So as everybody knew it was coming, the long-awaited interest rate move happened this week. The Federal Reserve finally, what's that song? A little less talk, a little more action. He made that quarter point move. So interestingly enough, there was very little effect on the interest rate environment, only because this has been so widely anticipated. It's been baked into the cake, if you will, for a while. So we have officially started the increasing interest rate environment with the Federal Reserve. So we're going to watch and see what happens. And those of you who follow the mortgage market closely know that the Federal Reserve overnight rate does not dictate mortgage rates, although everything does have a tendency to trend together. So it's kind of like the tide coming in. The surface of the water might be moving at a different speed than a little bit deeper, but it's all moving in the same direction. So we're going to watch interest rates moving forward. And interestingly enough, there are 226 countries that have monetary policy with an overnight rate at 0 or less. And we are now the only ones venturing back into positive territory. So hopefully we're leading the way and we're not out there by ourselves on this one. I do believe inflation has caused this. I think the overall global economy still wants cheap or free money. But locally in the U.S., we're experiencing so much inflation that the only way to offset that at this point is the Fed to start moving rates. As we've all heard, we've kind of beaten this over the head. So we're gonna watch it and see. It doesn't have an immediate play on rates. And interestingly enough, I think what may have an effect is they indicated during the meeting that they intend on another 6 moves this year. So by the end of the year, they anticipate the overnight rate being close to 2%, which it's going to make the cost of money across the board more expensive. So hopefully that tamps down inflation as they intend it to. Inflation's darn near 8%, and their target for inflation in a healthy economy is 2%. So there's a lot of movement to be made on the inflation side of the scale, but hopefully this works and it's not a situation where we have too little too late or then it spins into overcorrecting. I don't know, kind of like driving a truck down a dirt road. My first experience driving on my own, I was 12 years old and my father put me behind the wheel of a old F100 with a 3-speed column shift on it. And he climbed in the bench seat right next to me. And as he did back then, popped open a Budweiser and said, "All right, boy, this is your turn to drive." So we took off. We lived out west of town, so we were on dirt roads, and we probably couldn't get away with any of that today. But anyway, going down that dirt road, I took a corner and shifted at the same time, and the rear end of the truck got a little loose. So we swerved, and I spun the wheel back the other way, just as, you would, and, trying to correct it. And I didn't know what the heck I was doing. And the truck spun back the other way, and, a series of kind of fishtails down the road. Dad reached over and grabbed the wheel, steadied it, and then asked me to stop the truck. And I thought, oh my God, I'm in trouble. He's going to get mad at me. Luckily, he didn't spill his beer. He probably would have been mad. But long story short, one of the life lessons I took away from that was what he shared with me next was sometimes overcorrecting is as dangerous as not correcting at all. And while I was kind of swerving down the road as a young boy in that pickup truck, that's kind of governed some of my decision making in life is don't overcorrect, don't react, kind of gather the data and respond. So hopefully that's what the Fed has done. But, interest rates, as we mention every week, have ticked up just a little bit. We are now over 4%. As I often mention, the Freddie Mac weekly report that is issued on Thursdays came out this week with an average 30-year fixed rate for all products in all metros at 4.16%. Costing almost a point. So that rate is being purchased down, if you will, with fees of almost a point. So we're in the fours. Luckily, a lot of the ladies have been practicing saying four with those duck-lipped selfies on Facebook and Instagram. So you do need the duck lips to spit four out. But that's where we are. And the good news, everyone, is it's still a wonderful, wonderful interest rate in the fours. I think there's only been 3 times historically that we've been at a rate this low for this long. So 4% is a wonderful interest rate long term. It's cheap money. It still makes a ton of sense to go out there. Actually, while I'm talking about this, I just want to throw out one thing. I had a super interesting conversation with someone, and it dawned on me that we only really get this nitpicky about interest rate when we talk about real estate purchases. And I was talking with a client who has a super cool car, and I just asked him, what interest rate do you have on that car payment or on the car loan? And he didn't know. He said, I don't know. I said, well, you know what your payment is? Of course he knows what his payment is. I said, and you're happy with the car and you're happy with that payment? His answer was yes. And I asked him then, what interest rate do you have on your credit card? He couldn't answer that either, but also happy with the credit card company. And my point in all that is oftentimes we evaluate the cost of something just as the payment. We're only considering the payment, and we offset that by either the value or the pleasure that that purchase gives us. In the case of a car or a truck, there might be utility involved in the truck. It might be a work vehicle, and you use it as a tool to make money. But you've done that math. That costs me $350 a month or $450 a month, and for the amount of pleasure or utility I get, I'm happy with that. Well, we're at that point where we need to concern ourselves less with the interest rate that we're buying a home with and look at the payment, right? So we're still talking about fully amortized 30-year fixed rate. So you're paying principal down with each monthly payment. So it still makes sense to own the home. You hear me preach it all the time. Even if property values never go up again, you're accumulating equity by paying down the note. So my point in all this is if you are paying rent and you can go out there and make a purchase with a comparable or even in some instances lower payment, why would you not make that purchase? So I'm working with a client right now. I'm not going to disclose any names, but he's making a purchase of a property for $325,000. He's using an FHA loan, so he's putting 3.5% down. His monthly payment, including everything, principal, interest, taxes, and insurance, is less than $2,400 a month. Now, we talk about that Zumper rent report often on this show. In West Palm Beach, and I use West Palm as the example metro because that's where we are broadcasting from. We're in the iHeart studios here in West Palm Beach. But the average rent in West Palm Beach is $2,800 a month. So for a 3-bedroom, 2-bath. So why, if you could buy for less than $2,800 a month, would you get hung up on a 4% interest rate instead of a 3% interest rate? So again, I throw that out there because when you're evaluating rent against your potential mortgage payment, look at the payment. In that example, this gentleman would actually save money each month over rent, and who cares if the interest rate is 3% or 4%? So I share all that only because buying real estate still makes sense. And we're going to get into some of that on the other side. I hear the sirens coming up behind me, so you know what that means. We're going to go into a break. But on the other side of this break, we're going to take some more questions. We're going to dig a little deeper on that particular topic. But hit us on the Anytime hotline at 561-291-8569 with your questions, or www.mr.mortgage. Hey, it's Mark Eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Here's another 5-star review.
My wife and I own a small business. And the way our accountant files our taxes, we don't show much income on tax returns. Because of this, it looks as if we don't make the money. This was a problem for our bank when we applied for a mortgage. But not for Mark. He verifies our income by using our monthly bank statements. Mark and his Mr. Mortgage team made a big difference for me. Yes, I am happy to recommend Mr. Mortgage Mark.
It's not every day that you need an appraisal, whether it's for a divorce settlement, estate planning, or maybe you're appealing a tax assessment, or you just want to make sure you have adequate coverage in your property insurance. When you need a certified appraisal, turn to my friends at soflappraisal.com. That's soflappraisal.com. Peter and his team have been appraising properties here in South Florida for decades. soflappraisal.com. And tell them you heard this on the Mr. Mortgage Show.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now, 561-291-8569.
All right, so we are back. So my point in all of that opening monologue, if you will, was don't get hung up on the interest rates. Look at the overall opportunity that's in front of you. You hear me say opportunity in the market all the time. So I'm not going to beat that over the head any longer. I do think that we have a tendency to, we're a headline society. So if we see rates go up, all of a sudden we think it's real estate makes sense, doesn't make sense anymore. And it couldn't be farther from the truth. We've talked about real estate as a wonderful hedge against inflation. Rents are going up, food is going up, travel is up, everything is up. If you had a 30-year fixed rate mortgage payment, your housing expense would not be going up. So just give all that some consideration. We're always happy to answer your questions, even if they're not, directly related to an immediate transaction and you just want to have a strategy session. Give us a shout. Again, that Anytime hotline is 561-291-8569. And when Dom and I are not in the studio, that number pushes to my office. So you can always get us at that number, 561-291-8569, or www.mr.mortgage. And the last thing I'm going to say about this whole anticipation of a housing market shift, and we've got that near-term memory of the crash, is we're in a very, very different market. We've experienced this appreciation cycle for different reasons. And I'm going to throw out one example and then I'm going to move on. Back when we had the housing bubble, we had one person buying multiple properties. So it was pure speculation. So when property values started to decline because money wasn't there for people to then buy those properties from that investor, if you will, and that wasn't a seasoned investor, it was an average Joe. He had multiple properties to unload. They went into foreclosure. We're not seeing that now. We're seeing people line up to buy their one and only primary residence. So there's still way more demand than there is sell side inventory. So for that reason alone, I think that we're in a different market. It feels the same. I get it. It's scary, but do not let the interest rates scare you away. So as promised, we're going to dive into some questions. I'm going to throw it over to Dom, my producer. I know he's got a question that came in during the break. What do we have, Dom?
All right. I have Christopher from the text line. Christopher said, my landlord just jacked my rent by almost $500. This doesn't seem legal. Is there anything I could do about it?
Hey, Christopher. Yeah, that's a tough situation to be in right now. And I'm hearing a lot of that. I get